You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Friday, September 14th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. First thing to know is U.S. consumer in spotlight on economic agenda. Coming after Thursday's weaker than expected inflation data, shopping takes the spotlight in economic indicators, with numbers on retail sales and consumer sentiment arriving later on Friday. The Commerce Department will release its retail sales data at 8:30 a.m. Eastern Time, with a solid rise expected for August, although a slightly lower one from the month before. Economists expect retail sales rose 0.4% last month, and that core retail sales, which exclude auto sales, rose 0.5%. At 10 a.m. Eastern, the focus will shift to the University of Michigan's preliminary measure of consumer sentiment for September. The Consumer Sentiment Index is expected to have risen to 96.7 from 96.2 in August. There will also be numbers on current consumer conditions and inflation expectations. Second thing to note today is China once again shrugs off Trump threats. After U.S. President Donald Trump suggested that he was under no pressure to make a deal with China, they are under pressure to make a deal with us. Beijing was quick to shrug off the claim. The Trump administration should not be mistaken that China will surrender to U.S. demands, state-run China Daily published on Friday. It has enough fuel to drive its economy even if a trade war is prolonged, the paper insisted. The response came even as data released Friday showed that Chinese fixed investment slowed to just 5.3% for the first 8 months of the year, the lowest level on record. The data suggests that businesses in the world's second largest economy are hesitant to invest as they worry over the prospect of a full-blown trade war. Third thing to note today is U.S. futures rise ahead of data dump. U.S. futures pointed to another day of gains on Wall Street Friday as investors looked ahead to a slew of data and kept an eye on trade developments. The fourth thing to know today is oil prices recover from a sharp decline, and U.S. rig count is on tap. Oil prices recovered on Friday from the prior session's sharp decline and remained on track for solid weekly gains as investors looked ahead to the latest gauge of U.S. production. U.S. crude oil futures gained 0.44% to $68.89 at 5:47 a.m. Eastern, while Brent oil traded up 0.2% to $78.34. Both barrels were still on track for weekly gains of 1.8% and 2% respectively, as traders await the latest data on U.S. crude production from Baker Hughes. And the fifth thing to note today is The cable hits a 6-week high as Bank of England warns of rate hikes after no Brexit. The pound hit a 6-week high against the dollar on Friday as Bank of England Governor Mark Carney reportedly warned that a no deal Brexit would likely mean higher interest rates. Carney warned that if the UK and European Union were unable to forgive trade deals, that the result could be as bad as the 2008 financial crisis, driving the pound lower. The corresponding increase in inflation would likely require BOE to tighten policy. Our second story today is from Bloomberg.com. VIX options volume soars as someone bets big on a volatility spike. Someone in the options market is betting that the CBOE Volatility Index, which has been trading below its 5-year average, is headed back towards that level it was at during the market turmoil in February. The VIX fell to 12.37 on Thursday. It's down more than 66% from its February 5th peak. One options investor seems to be positioning for a 62% surge into November. The total VIX options volume spiked to more than double the 20-day average as one investor bought approximately 76,000 November 20 calls, while simultaneously selling the same number of November 26 calls and approximately 95,000 October 13 puts. While this trade's ultimate goal is to profit off a surge in volatility, it appears it will be profitable even if the VIX doesn't move, given the trader collected about 8 cents per contract when it was executed. Our third story today is from Investing.com. Hasera and IBM launched the Yellow Pages of blockchain. IBM announced on Thursday that it was joining the Hasera Unbounded Registry as a founding member. The project claims to create a platform that would include all blockchains and blockchain-related companies in a catalog-like format. IBM said that this looks like the Yellow Pages of blockchain, given the conceptual similarities with the old Yellow books popular in the US and other countries, which structured a directory of businesses by brand name and phone number. The Unbounded Registry project, led by blockchain firm Hasera, was officially launched on Thursday. And our final story today is from CNBC.com. U.S. import prices post largest drop in more than 1.5 years. U.S. import prices recorded their biggest drop in more than 1.5 years in August, amid declines in the cost of fuels and a range of other goods, suggesting a strong dollar was curbing imported inflation pressures. The Labor Department said on Friday import prices fell 0.6% last month. It was the largest decline since January of 2016, followed a downwardly revised 0.1% dip in July. Import prices were previously reported to have been unchanged in July. Economists polled by Reuters had forecast import prices falling 0.2% in August. In the 12 months through August, import prices rose 3.7%, slowing after surging 4.9% in July. And that, ladies and gentlemen, is news you can use for today, Friday, September 14th, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great weekend.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.